January 2025. China made 3 moves in 1 week. Move 1. China's central bank purchased 25 tons of gold in January. This continues a record buying streak that began in late 2022. Move 2. China and Saudi Arabia expanded their yuan for oil agreement to include other Gulf states. The United Arab Emirates, Kuwait, and Oman are now accepting yuan for oil exports to China. Move 3. China announced new bilateral trade agreements with 15 countries. All agreements include provisions to settle trade in yuan or local currencies, bypassing the US dollar entirely. If you think these are random economic moves, you're missing the pattern. This is stage 3 of a 3-stage playbook to replace a reserve currency. The same strategy Britain used against Spain in the 1700s. The same strategy America used against Britain in the 1940s. When a reserve currency is replaced, it happens in 3 stages over 20 to 30 years. China started stage 1 in 2008. We're now in stage 3. Here's the 3-stage playbook, where we are right now, and the specific 24-month timeline for what happens next. The 3-stage currency replacement playbook. Section 2, the playbook framework. This is the currency replacement playbook. It's a 3-stage strategy used by rising powers to displace an existing reserve currency. Here are the 3 stages. Stage 1, accumulate gold and build reserves. This takes 15 to 20 years. Quietly prepare. Buy gold. Build foreign currency reserves. Strengthen your economic foundation. Stage 2, build alternative infrastructure. This takes 5 to 10 years. Create payment systems. Establish bilateral trade agreements. Build institutions that offer a functioning alternative to the existing system. Stage 3, execute the transition. This takes 2 to 5 years. Accelerate adoption, create momentum. Make the old system increasingly untenable for your trading partners. This isn't theoretical. America did this to Britain. The timeline, 1920 to 1956, 36 years from preparation to completion. China's timeline, 2008 to 2027, approximately 20 years. China started stage 1 in 2008 after the financial crisis. They entered stage 2 around 2016 with the launch of alternative institutions. They entered stage 3 in late 2024. We are in the final phase right now. Let me show you how each stage worked historically, then what China is doing at this exact moment. Stage 1, accumulate gold and build reserves. Section 3, Stage 1, accumulate gold and build reserves. Historical example, America versus Britain, 1920s, 1940s. After World War I, Britain was financially exhausted. America was wealthy and its economy was booming. Throughout the 1920s and 1930s, America accumulated gold while Britain steadily depleted its gold reserves, funding wars and maintaining its empire. By 1944, when the Bretton Woods Conference was held, America held approximately 60% of the world's monetary gold. Britain's gold reserves were nearly exhausted. This disparity gave America overwhelming leverage. The dollar, backed by gold, became the new reserve currency. China's stage 1, 2008 to 2016, in 2008, the global financial crisis revealed to China how dangerous dollar dependency could be. The U.S. Federal Reserve's actions directly impacted China's economy, and China had no control. China began a massive, quiet gold accumulation campaign. Official reported reserves, approximately 1,000 tons of gold in 2008. By 2024, official reserves reached about 2,200 tons. But many analysts believe China's actual gold reserves are far higher. Estimates range from 4,000 to 6,000 tons when accounting for unreported purchases. Why would China underreport? To avoid driving gold prices higher before accumulation is complete. Once you announce large holdings, the market reacts and prices rise. Beyond gold, China built $4 trillion in foreign exchange reserves, the largest in the world. China diversified these reserves away from pure dollar holdings into euros, yen, and physical commodities. Domestically, China became the world's largest gold producer and encouraged its citizens to buy gold. The opposite of Western policy, which discourages gold ownership. The Shanghai Gold Exchange became a major global gold trading hub with yuan-denominated contracts. Stage 1 is invisible by design. By the time anyone notices what's happening, the foundation is already built. America did it to Britain. China has done it over the last 17 years. But gold alone doesn't replace a currency. You need infrastructure. Stage 2 is where China built a complete alternative to the dollar-based financial system. Stage 2, build alternative infrastructure. Section 4, Stage 2, build alternative infrastructure. Historical example, America's system, 1944. At the Bretton Woods Conference in 1944, America didn't just propose dollar dominance, they presented a fully operational system, the International Monetary Fund, the World Bank, the Marshall Plan for European Reconstruction, all designed, all ready to implement immediately. The infrastructure was built before Britain's pound lost its reserve status. When the transition happened, the dollar system was ready to go. China's Stage 2, 2016-2024. China spent the last decade building a parallel financial system. Here's what they built. CIPS, Cross-Border Interbank Payment System, 2015. CIPS is China's alternative to SWIFT, the US-controlled international payment network. CIPS processes yuan transactions internationally. Over 1,300 financial institutions from more than 100 countries are now connected to CIPS. This allows countries to bypass the US SWIFT system entirely when trading with China. Asian Infrastructure Investment Bank, AIIB, 2016. The AIIB is China's alternative to the World Bank and IMF. It has 109 member countries, including US allies like the United Kingdom, Germany, France, and Australia. The bank has $100 billion in capital and funds infrastructure projects across Asia, Africa, and beyond. Projects are financed in yuan and local currencies, not dollars. Belt and Road Initiative, BRI, 2013 present. China's Belt and Road Initiative is a $1 trillion-plus infrastructure program spanning over 150 countries. Roads, railways, ports, and energy projects are built with Chinese financing and often Chinese labor. These projects are financed in yuan, creating demand for China's currency globally. Bilateral currency swap agreements. China has signed currency swap agreements with over 40 central banks worldwide. The total value exceeds $500 billion. These agreements allow countries to trade directly in yuan and their local currency, completely bypassing the dollar. Shanghai Gold Exchange, SGE. The Shanghai Gold Exchange offers yuan-denominated gold contracts with physical delivery required. This contrasts with Western gold markets like COMEX, which are primarily paper contracts. Price discovery for gold is slowly shifting from London and New York to Shanghai. Petro-yuan, 2018 present. In 2018, China launched yuan-denominated crude oil futures contracts. Saudi Arabia, Russia, and Iran began accepting yuan for oil sales to China. This was the first major breach in the petrodollar system, which has existed since 1974, the complete system. By 2024, China had built everything needed to function without the dollar. An international payment network, a development bank, massive trade infrastructure, a gold exchange, bilateral agreements with dozens of countries, and WAN for oil arrangements with major producers. The parallel system is complete. And now, Stage 3, execution. The infrastructure is built, the reserves are ready. Now comes Stage 3, the execution. And this is happening right now in 2025. Stage 3, execute the transition section. 5. Stage 3, execute the transition. Historical example, dollar replacing pound, 1945-1956. In 1945, Britain requested a massive loan from the United States to rebuild after World War II. The terms were harsh. Britain had to make the pound convertible to dollars and accept American dominance in the new financial system. In 1947, Britain was forced to devalue the pound. In 1956, during the Suez Crisis, the United States threatened to crash the pound if Britain didn't withdraw its forces. Britain complied. The pound's status as reserve currency effectively ended. The timeline, 11 years from Bretton Woods to final displacement. China's Stage 3, 2024-2025, late 2024, marked the acceleration of China's strategy. The BRICS alliance announced its expansion to include major oil-producing nations: Saudi Arabia, the United Arab Emirates, Egypt, Ethiopia, and Iran. At the BRICS summit, a gold-backed trade settlement mechanism was discussed. While not yet fully implemented, the framework is being designed. Russia-China trade became almost entirely de-dollarized. Over 95% of bilateral trade between Russia and China is now settled in yuan and rubles, no dollars involved. January 2025, the 3 moves. Now we return to the hook. January 2025, 3 moves in 1 week. Move 1, gold accumulation accelerates. China's central bank purchased 25 tons of gold in January 2025, continuing a streak of 15 consecutive months of purchases. This is the longest continuous buying period by China's central bank in history. Official reserves are approaching 2,300 tons. Analysts estimate actual reserves, including unreported purchases, now exceed 5,000 tons. Move 2, Saudi yuan-oil expansion. China and Saudi Arabia expanded their yuan for oil agreements to include other Gulf states. The UAE, Kuwait, and Oman are now accepting yuan for oil exports to China. This represents approximately 15 to 20% of China's total oil imports, now settled in yuan instead of dollars. The petrodollar system, established in 1974, is fracturing. Move 3, bilateral trade agreements. In January 2025, China announced 15 new bilateral trade agreements. These agreements span Africa, Latin America, and Southeast Asia. All include provisions to settle trade in yuan or local currencies. Total yuan settled international trade is now estimated at over $2 trillion annually. Additional 2025 indicators: digital yuan international rollout. China is piloting cross-border digital yuan transactions with Hong Kong, Singapore, and other financial hubs. The ECNY, China's central bank digital currency, is designed to bypass SWIFT entirely. Transactions are fast, cheap, and require no dollar intermediary. BRICS currency development. The BRICS working group is accelerating the design of a gold-backed currency for trade settlement among member nations. If launched in 2025 or 2026, it could handle over 40% of global trade volume. Russian and Middle East. Coordination. Russia is selling oil and natural gas to China and India primarily in yuan. Middle Eastern nations are quietly diversifying their reserves, selling dollars and buying gold. This is a quiet revolt against the dollar system. The pattern. Stage 3 is about creating momentum. Each country that switches to yuan gives others permission to do the same. This is how currency transitions happen. Not through a single dramatic event, but through a cascade of individual decisions that become a stampede. And it's happening right now. The 2025-2027 timeline section. BRICS, the 2025-2027 timeline. Based on the historical pattern and current trajectory, here's what to expect over the next 24 months. 2025, current year. First and second quarter, continued gold accumulation by China, Russia, and other BRICS nations. Expect monthly purchases exceeding 20 tons from China alone. Second and third quarter, BRICS summit, likely in July or August. Watch for a potential announcement of a gold-backed trade settlement currency. Third and fourth quarter, more countries will announce bilateral yuan trade agreements. The petro-yuan system will expand to cover 25 to 30% of China's oil imports. Key signal to watch: Saudi Arabia formally joining BRICS. This would be a massive geopolitical signal. 2026 digital yuan adoption accelerates internationally. Major financial hubs begin integrating ECNY for cross-border payments. If the BRICS currency is launched in 2025, by 2026 it will begin handling significant trade volume between member nations. The US dollar's share of global reserves drops below 55%. It currently sits around 58%. The United States may experience its first major dollar crisis. Foreign demand for US Treasury bonds could weaken significantly, forcing higher interest rates. Key signal to watch: failed or weak US Treasury auctions. If foreign buyers don't show up, interest rates will spike. 2027, tipping point year. If the historical pattern holds, 2027 is the tipping point. The dollar could experience a 20 to 30% devaluation against the yuan and gold. Multiple emerging market countries will openly shift their reserves from dollars to yuan, gold, or the BRICS currency. The United States will be forced to respond. The options: dramatically raise interest rates, triggering a recession, or allow the dollar to devalue, triggering inflation. By the end of 2027, a dual reserve currency world will have emerged. The dollar will remain dominant in the West. The yuan, or BRICS currency, will dominate in the East and much of the developing world. Warning signs to monitor. Immediate, next 6 months. China's monthly gold purchases exceeding 30 tons. Saudi Arabia officially joining BRICS. More than 5 major countries announcing yuan swap agreements in a single quarter. Medium term, 6 to 18 months. U.S. Treasury yields on 10-year bonds spiking above 5.5%. The U.S. dollar index falling below 95. Gold breaking decisively above $2,500 per ounce. Critical, 18 to 30 months. A failed or significantly undersubscribed U.S. Treasury auction. The IMF announcing an increased yuan weighting in its special drawing rights basket. More than 3 major oil exporters accepting primarily yuan for their exports. This isn't prediction. This is pattern recognition. America replaced the British pound in 20 to 30 years. China started this process in 2008. We are 17 years in. The historical pattern says 2027 to 2030 is the transition completion window. What this means for you, Section 7, what this means for you. So what does this transition mean in practical terms? If you hold dollars, dollar purchasing power is likely to decline 20 to 40% over the next 3 to 5 years. This won't be hyperinflation. It will be steady erosion. Imported goods will become significantly more expensive. Domestic inflation will accelerate as the dollar weakens. If you hold dollar-denominated assets, U.S. stocks, mixed results. Export-heavy companies will struggle. Domestic-focused companies may be relatively insulated. U.S. bonds, significant risk. As foreign holders sell Treasury bonds, yields will rise and prices will fall. Long-term bonds are especially vulnerable. Real estate depends on location and financing. If you have a fixed rate mortgage, dollar devaluation actually helps you because you're repaying the loan in cheaper currency. What historically survives currency transitions? Gold. In every major currency transition in history, gold has preserved purchasing power. Hard assets in the rising currency zone, Chinese real estate, Asian stocks, and businesses with revenue in yuan or other strengthening currencies. Commodities priced in the new currency. If oil becomes primarily yuan priced, holding oil-related assets denominated in yuan could be advantageous. What gets destroyed? Cash dollars sitting in bank accounts. Purchasing power erodes steadily. Long-term dollar-denominated bonds. Foreign holders will sell, driving prices down. Portfolios with no international diversification, pure dollar exposure becomes a concentrated risk. Geopolitical implications. The United States will lose its ability to impose financial sanctions effectively. Countries will simply use yuan-based systems instead of dollar systems. U.S. military reach may contract. Financing global military presence becomes more difficult when you can't print the reserve currency without consequence. A multipolar world will emerge. No single currency will dominate the way the dollar has for 80 years. The timeline matters. 2025. There is still time to reposition. Diversification is relatively inexpensive now. 2026. The transition will accelerate. Repositioning becomes more expensive as more people recognize the pattern. 2027. The tipping point. By this point, repositioning may be prohibitively expensive. The opportunity to prepare will have largely passed. This isn't about winning or losing. This isn't about China winning or America losing. It's about a multi-currency world replacing a single currency world. That transition has winners and losers. Understanding the transition allows you to position accordingly. The transition is happening now. Section 8. The payoff. Here's what most people miss about currency transitions. They happen slowly, then all at once. America replaced the British pound over 36 years, from 1920 to 1956. But the final collapse of the pound's reserve status happened in just 3 years, from 1953 to 1956. China started this process in 2008, 17 years ago. If the pattern holds, we are entering the all-at-once phase right now. January 2025. 3 moves in 1 week: gold accumulation, yuan-oil expansion, bilateral trade agreements. These aren't experiments anymore. This is execution. The 3-stage playbook. Stage 1. Accumulate reserves, gold, foreign currency, economic strength. Complete. Stage 2. Build alternative infrastructure, payment systems, development banks, trade agreements. Complete. Stage 3. Execute the transition, accelerate adoption, create momentum, make the old system untenable. In progress, right now. Timeline, 2025 to 2027. The dollar won't disappear, but its monopoly will end, and when a reserve currency loses its monopoly, everyone holding that currency pays the price through devaluation, inflation, and loss of purchasing power. The pattern is clear, the timeline is visible, the signals are present. The question is, will you see the transition before it completes? If you want to keep tracking this transition, the specific moves and signals that show where we are in the playbook, subscribe. Because the next 24 months will determine what your dollars are worth in 2030. The playbook is running. The timeline is set. The signals are visible. Are you watching?